Everybody, this is Jim at SP500chart.com. It's Sunday afternoon, well, actually early evening. Well, I take it back. It's not that early evening, it's almost 7 p.m. here on the East Coast, and it is February 8th, 2015. We're going to take a look at the week that ended February 6th, 2015, see what happened, and see if we can get a sense for what we might be looking at coming into starting the week of the 9th. Before I do that, I want to remind you, as always, that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just this guy who draws lines on charts. So let's take a look. Starting out here on a 30-minute chart. Briefly on Friday, we saw the S&P get over this 2064, 2065 resistance, but we did not close over it. So that cannot be taken as a breakout at all. As a matter of fact, when we did get over it, we were not over it by a technically significant margin. We were only over it by about 7 to 8 points, which is less than 0.5%. Now, what's interesting here, and where the challenge, I think, comes into this chart, is we're still seeing things that are less organized than what we're used to seeing. I pointed out over I think the last weekly review, nicely defined, though steep downtrend, pretty nicely defined downtrend here, nicely defined uptrend. On the next downtrend, things started getting a little squirrely, and now it looks like there just aren't enough data points for me to take a look at the last leg up that we've started and know where we should draw our support line. We did throw this resistance line up on the chart, and lo and behold, that is almost exactly where the markets found resistance on Friday. But as far as where is support, I really, in good conscience, cannot offer anything that I think is reliable. The only thing I could do is just say, well, let's on this 10-minute chart, where were our last couple of areas where it looks like we got something of a bounce. If you go down here, then nothing really lines up. If you go here, you can see we do have 3 little bottoms that line up, but it really does not match very well with this upper line. And because we had that nice gap up really on the 3rd, on Tuesday, and we had very little trading from about 2004 to 2035. So we had essentially we had a 30-point move, not a gap really. The gap was on the open on the 3rd. But you got this 30-point move that really never saw any kind of counter move. So that leads me to believe that with the inability to close over this line, we may be looking at some weakness to start the week. Now, I mentioned also that it looks like we have an area that's kind of a gray area of technical importance that's inside this very, very skinny and long rectangle. And that's based upon what we've seen over the past 4 weeks or so. We've got areas here, 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 where this is either producing support or resistance, depending upon which direction it is being approached from. even though I can't really tell you anything definitive about a rising channel, see back here we had a nice rising channel. This is just not one of those situations. I still think this is the line to watch. 2064, 2065. It was nice to get over it a little bit on Friday. Maybe if we see strength early on Monday, maybe we can take that out and be about our business. The reason I say that is you look at the gains of the week, where we started under. We actually traded at one point at about 1981, and then here we end the week with a high early on Friday of 2070. That is a 90-point swing in the S&P. That is, assuming about 2,000 as our starting level, that is 4.5% off of our lows of the second. That's 4.5%. I could understand very easily some traders wanting to lighten up on Friday going into this weekend. So maybe that's the reason we saw this dip in the afternoon, and maybe we will get back to a rally on Monday at some point and take this line out. I think that is a possibility. But if we do lose some ground, I would be interested to see if our little gray area down here picks us up and provides some support. Now, if we look at this on a 2-minute chart, there's some little things going on here. For example, we had a small bear flag right here. Came down pretty hard. Bear flag came down pretty hard again. What do they say about flags? Often they fly at half mast. So if we measure the distance from here to where the flag began, right here, and then we measure where the flag broke down, this flag is flying at half mast. The only thing that I could look at, and I don't think this is really something that we can necessarily trade on, but if you look at the way we ended, we came down out of that flag, wiggled back and forth a bit, and then instead of a pattern that was rising after a downtrend, we entered into a pattern that was descending after a downtrend. Strangely enough, whenever you have a sharp sell-off and then you sell off at a less sharp level and you see a good bit of movement back and forth in a fairly tight trading range, often that is a sign of a pending reversal. What happens is when you sell off and then you move up, as you move up slowly, you're building up selling pressure. When that selling pressure breaks, you then sell off again. But when you sell off again and then you start selling off more slowly, what that's doing is that's putting the brakes on the move. We did end the day a small amount of distance out of this pattern. So let's see if maybe Monday we don't turn things back around. And I would say if you're looking for a sign like, well, Jim, when would you say that it looks like maybe we're out of the woods, at least on the short term? I would say if we get over this line right here, if we break out over this at some point on Monday, provided it does not happen too deeply underneath this line right here, then I think we got a decent chance of getting that rally. But it's got to happen, I think, fairly soon. So what about the week in general? Well, I think the week was a success. We knew coming into the week that when we got generally out of this sloppy descending channel that we should expect a bounce. And that's exactly what happened. We got out of it actually on Friday, but we didn't close out of it by much at all. Then on the 2nd, we got underneath this line just a little bit, but then really made a nice move with 3 days of follow-through. And I know that the 4th was actually a down day, but if you look at this in total, the 4th was just, even though it was down a little bit, it was still part of that rising trend. It just so happened we closed at one of the support points in this 4-day, or actually more like a 5-day rally. So guys, let's just keep an eye on it. This is still an important level. Need to get over this. I believe we would find support in this gray area if we come down to it. If not, then we got these lines that are sort of not working extremely well lately, but they're still there. So we kind of get the general sense that we have some support down around the 2000 level, maybe a little bit lower. As you can see that that this trend line right here shows us that we have 1, 2, 3, 4 touches on this line now. So guys, like I said, it's a little bit sloppy. It's not extremely clear, but we still have, from this pattern back here in October, we still have a 2120 target. And if we can get over this line and close over it by a technically significant margin, this line right here, then I believe we can rightfully extend that target to more like 2140. Now finally, I want to say, when we were talking about that 2120 target even back last year, one of the potentials that we discussed was the fact that maybe this is something that's not going to happen until late February or March. And that still could very well be the case. So we're just kind of getting extended out a little bit. The good news is that if we continue to go sideways for a bit and then we do set a new high, we may have built a more secure platform to support that new high and to potentially provide for a series of new highs. I don't think we're at a top. Not yet. Someday we will be at a top. Right now, I don't think we're there. I don't think the psychology is right. For one thing, there are too many people who are thinking this might be a top. If they're thinking it's a top, guess what? They don't have their money in the markets. What is a top? A top is when there's so much money in the markets that nobody can buy anymore. All the money's in, there is no choice but for the money to start flowing out. We're not there. I just don't think we're there. That's not to say we couldn't come down. That's not to say we couldn't have some ugly days ahead. We've seen ugly days over the past 6 years. But I don't think that the psychology is there for that really, really massive and for that significant major change of trend. I don't think we're there yet. So guys, let's keep an eye on it together, see what happens as we come into this week, see if we get over 2065 by a decent margin, and see if we can power on up to 2140 or so. That would be great. So keep your fingers crossed. Let's keep watching this and following it together. Finally, I just want to say thanks for watching. Thank you for your support. On Thursday of this week, your video will be late. Just my schedule. I got no choice. But there will be a video to see. And thank you again for watching and for your support.